Start recording. Sweet. And actually, Blake, I'm gonna make you co-host as well, just because I see you on there. If you want to let anybody in that you see coming in, that would be awesome. But from here, what we covered 3 weeks ago, we found our daily high and low, right, on the daily time frame. Just to quickly recap, with these two areas here, right? Then we drop down from the daily time frame because now we found our area that we want to be trading in, right? So we drop down to the 4 hour time frame, look to see which are the most recent three highs and lows that the market created. We can clearly see right here we had a high previously, and then we actually ended up breaking that, making a new higher high. We moved lower, we created a higher low because this low is higher than this low, and then the market ended up moving higher again to create a new higher high, right? So what we're going to be covering this week is actually how to identify which area in the market you want to be entering your trades with the trend trap strategy, right? So after you identified that area on the daily high and low where you actually want to be looking for potential areas to buy and sell, right? We dropped down to the 4 hour time frame. We figured out we're in an uptrend. We're going to be looking for buys because the market is moving continuously higher, right? And from that 4 hour time frame, now we want to drop down one step lower to the hourly time frame chart, right? And from here, this is where we actually find our potential buy and sell areas, right? If the market is trending down, we're in a downtrend, we're going to be looking for sells, right? If the market is trending up, we're in an uptrend, we're going to be looking for buys, right? So in this case, we're looking for buys on gold. And how do you actually find your entry zones, right? This is something that is, you know, everybody's always looking for that perfect entry and looking for areas for the market to react off of. And that's what trend trap is, right? You're looking for the market not to just trade into your area, into your zone, but also to give you a reaction in that zone, right? That's going to be for next week, how to actually find the reaction inside of the zone that we find. But for today, right, we actually want to find those zones. So what do you want to do in this case on the 1 hour time frame chart? You can see that at the moment we're actually on the candlestick chart, right? You can see each one of these candles that's on the screen here represents 1 hour of time. But what you actually want to do is you want to take this off of the candlestick chart and actually go to the line chart, right? And as we discussed previously, right, in order to find highs and lows, we want to see the market trending like this or like this, right? And from here, in order to find your entry zones, in this case with gold that we're going to be going over, or when the market is in an uptrend, you're going to look for the most recent peaks, right? And if you're looking at for sells, you're going to look for the most recent valleys for the market to react out of, right? So this means in this case, since we're uptrending, right, over here on the left side in this uptrend diagram here, we're going to be looking for the most recent peak, which is this point right here, right? That's where the market peaked and then it dropped lower and then we actually broke above. We're going to be looking for the market to react off of that peak. And then on the right side here, we're going to be looking in this area because that's our valley, right, that we found here in the market. So from there, right, taking this and now understanding that we're going to be looking at peaks and valleys, right, we want to actually go to the line chart on the chart that we're going to be trading, right? Doesn't matter which pair that is. And you want to find the most recent two zones, right, or the two most recent peaks where the market reacted off of, right, or that the market created. So in this case, right, just to kind of draw and find different zones, right? Let me just find the tool here. There we go. Right here, you can see that the market it's making highs and lows, peaks and valleys everywhere, right? But where is the most recent peak in this case? Because we're looking for an uptrend, we're looking for buys, right? Where is the most recent peak that the market created, right? And why we're looking for peaks is because when the market is moving up and down like this, right, we can see that it's making higher highs and higher lows. But the highs for the buys in this case, right, this is going to be a stronger potential for us to find that area to continue, because in this case, when the market created that peak, it also created a valley, but this is that most recent peak that you want to react off of, because that's the most closest peak in this case, or valley in this case, closest to where price is currently at, right? So if we go back down to here, we'll grab our rectangle right here, and we can see that in this case, right, this is the most recent peak that the market created before creating this higher high, and now this is where currently the price is at. And this is for the market to come down and support off of, right? Because previously, back here, when the market was just kind of trending, we had another peak right here as well, right? And we're going to be talking a little bit about support and resistance. And what that means is this is an area where the market can support off of, right, to continue in our upward direction. And you always want to mark out two zones when you're looking for buy and sell entries. You want to look for two peaks or two valleys if you're looking for sells, right? And right here, we can see that those are our most recent two peaks, right? And now, since you've identified that, you want to go back off of the line chart and go back to the candlestick chart and now actually find, right, two candles in that area, in those two areas that you marked up, where you're going to actually identify your zone, right? So if you're looking for buys, you're going to be looking for the bullish candles. In this case, my bullish candles are blue. It doesn't matter what they are on your chart. They might be green or white, purple, doesn't matter, right? But for my chart, they are blue, right? So we're going to zoom in right here on this peak and actually identify a candle that got reacted off of the most, right? Or is in that area. And also, you don't want it to be too big. You don't want it to be, like hundreds of pips big, or, depending on what kind of currency you're trading. If you're trading like USD CAD or CAD Chef, right? There's different candles that, or different ways that you calculate the pips for those specific currency pairs, right? So in this case, I'm going to be looking for this candle right here, this blue one. I'm going to mark an arrow there. This blue candle right here to be my zone, right? Because it's not too small like this candle right here, this blue one, right? That's too small of a zone, but also we don't want it to be this one right here because that's way too big of a zone, right? For gold, that's from 3,400 all the way down to 3,388. That's like a 120 pip candle, right? We don't want it to be that big, and we also don't want it to be from 33.99 to 33.99, right? It's way too small of a candle, right? So we found a candle in our zone, and that's where we're going to be looking for a reaction to happen, right? In this case, we always want to mark out two zones, right? Because the market, sometimes it will just go straight through your first zone, right, and react in the next support area. If you're looking for buys, right, we're looking for the market to support off of these peaks. In this case, this is our first peak, our second peak, right? We want to draw two zones because sometimes the first zone does not get respected by the markets, right? It blows through this one and then reacts off of the second zone, right? So in this case, for the second zone, right, looking off of this area right here that we can see, I'm going to mark out a candle that makes sense for us to look for a reaction off of, right? So in this case, it will actually be this blue candle right here, right? So let's mark that down a little bit there. That's pretty good right there, right? And you can see in this case as well that this zone or this peak, right, it got respected all the way up until we blew past this high right here and created a new high, right? It was acting as a resistance. The market was playing below, resisting off of that zone until we broke above, and now it actually becomes our support. Does that make sense? Drop a 1 in the chat if that makes sense. Let me just pull up the chat box here. Hopefully you guys are still following. Awesome. Awesome. So now that we identified our two zones, right, what you want to do is you actually want to put a price label, right? You want to take a price label, put one there, and then one also here. And with your price labels, right, you don't want to just put a price label at a random spot on this chart, right? What you actually want to do is the market likes to react off of quarter levels, right? It's called the quarter level theory, right? And why quarter levels, right? Well, think about it this way. If you've ever been, somebody's asked you to go into a meeting or a time that would make sense to, call, what time do they usually give you, right? Do they give you 6:22, like the time that is right now, or did they give you 6:30? Right? Do they give you 5:47 or do they give you 5:45 to get on that call? Right? Usually we go in the quarter level theory, which is if you look at it on a time perspective, right? 15 minutes, 30, 45 minutes, and 0. Those are quarter levels. So we're going to do the same thing when we're on the chart, right? So we're going to change this to not 3398.215. We're going to take this and actually make it 3395. Right? And you can see that's the bottom of that zone. Or if you wanted to go a little bit more in the middle of the zone, you can even take, because it was at 3398, you can take 3397.5. Right? Something that makes sense in that zone, but a quarter level, right? We're going off of the quarter level theory. And then right here as well, we see it's at 3371.556. We'll actually change that and just go down to 3371.5. Right? So now we have our two zones. Right? Does that make sense? Drop a 1 in the chat if that makes sense. Awesome. I'm seeing some ones. Right? So this way, when you're looking for the different zones or the different area for the market to react out of, right, for your potential entry zones in the markets, you're not just guessing where you should get in. You're not just waiting for the market to get in your zone and then enter right away, right? We're going to cover that next week, what that looks like. But once you identify the zone, you actually want to wait for the market to give you a reaction out of that zone, right? And like I said, I always want to have two zones because sometimes, it doesn't respect that first zone right away, right? But also another thing to consider is sometimes the market will move into your zone and might move through your zone a little bit, give you a reaction a little bit lower, and then react out of it, right? That zone is still active unless it just blows right through and then gives you a reaction out of the next zone, right? If it moves a little bit lower, like let's draw this out just for an example, right? Let's say the market was moving down, and then it came to your zone, actually blew through, and then it like gave you some kind of reaction here and then went up. right? That zone is still an active zone, even though we bottomed out right here, right? It's not an inactive zone until you no longer get a reaction out of that zone and we moving to the next zone. All right, so let's switch things up a little bit and go to a different chart. Drop in the chat which pair you would like me to take a look at, right? I'm going to cover one or two. We'll do the NASDAQ as well. And one more in the chat that you guys like to trade. And another thing to note as well is while we pull up this NASDAQ chart here, is don't get married to the idea, right, that the market has to go in your direction, right? The market is going to do what it wants, but what you want to do is you want to focus on your areas that you have, right? And doing the top-down analysis, you're going to see, right, where it makes sense to enter in this market. And then from there, right, you're waiting for the reaction out of your area, right? If it doesn't go into your area, it drops lower, right? Let's go back to gold right before we go to NASDAQ here. Go back down to the 1 hour time frame, right? Let's say it came into your area and then broke below, and now it's kind of sitting in this middle here, right? You're probably going to wait for this next zone to get a reaction out of here. But if that doesn't happen and it hits your stop loss and continues to go lower, right? Don't just keep entering buys just to enter buys. Wait for the market to develop and then give you a better entry point somewhere else, right? Maybe the market is moving on the smaller time frames. If you're looking like on the hour, maybe zoom out to the 4 hour chart again and see, are we still in an uptrend, right? Did we break this higher low and continue lower? Because if we did break this higher low, now we're going to be looking to take sells, right? The market has flipped direction on us, and now we're going to flip the way that we look at the market, right? Don't get married to the idea or don't get married to the zone, right? Just because that's what you think is right, right? We're not always 100% right in trading, right? It's one of those things where you can give yourself an edge by waiting for the market to come to you and waiting to react out of your zone, right? But that's not always going to be the case, right? Don't go chasing trades and hoping that the market's going to react and 100 times out of 100, 10 times out of 10, like it's not going to do that 100% of the time, right? Always want to make sure that you're doing what's necessary, doing your top-down analysis, and making sure that you're waiting and being patient in the markets, right? The markets, they can do some crazy things sometimes, but if you're not patient, that's when you blow accounts and you start losing money and all these different things happen. That's not what we do as traders. We're not chasing the market. We're waiting for the market to give us, those potential areas to buy and sell from, right? But we also don't want to be too greedy, chase the market, and then, hoping that it reacts out of that area, hoping that it continues in your direction. Always, if you're unsure, zoom back out, do your top-down analysis again, go from the daily time frame all the way down to the 1 hour time frame. Make sure you have the right direction, which way the market's going, and then look for your zones. All right, but in this case, we're going to look at NASDAQ here, right? And as we talked about, we're looking for our daily high and low, most recent to price, right? In this case, we have this high right here, and then we have a low point right here, right? So for the daily high, we want a bullish candle followed by a bearish candle. The top of that is our daily high. And then for the daily low, it's a bearish candle followed by a bullish candle is our daily low. All right, so now we drop back down to the 4 hour chart. And just by looking at this, which way or which trend is the market going in right now? Right, we're focusing on the most recent time in our zone. which direction is the market moving in? Are we in an uptrend or a downtrend? We're going to mark this out too. Drop in the chat what you guys think. Uptrend or downtrend? Let's see what you guys said here. Uptrend. Perfect. So now let's find our zones, right? Or let's find our highs and lows, the three most recent highs and lows of this chart in our zone, right? So we can right away, we can go here, right? And we see that we have a higher high, right? Then we can see that most recent to price, we also have a higher high right here, followed by a higher low, and then our lower low, which was the lowest point that the market reacted out of before giving us those three other areas, right? So we have our low point, higher low, higher high. Now we want to drop down to the 1 hour time frame chart again, right? And most recent to price, right? In order to find your peak that we're looking at is, how do you identify that, right? What did I say before we go back onto the candlestick to find our candle? What do we do? Let's see who is paying attention. Isn't the last low a lower low? Do you mean, let's go back to the 4 hour time frame. Do you mean this low as the lower low? The one that we have as a higher low here, or which one are you referring to? The very beginning. This one here, where the market is currently at. So in this case, that wouldn't be considered a lower low, right? Because as you can see, we still respected this area, right? We still respected this high. Because we still respected this high, we didn't break below this higher low. This would not be considered a lower low, right? You always want to look and see, did we respect the most recent higher low or the lower low? And that will give you an identification if that's a new low or a new high, right? In this case, we just traded lower. We still respected this higher high. We never broke down below this higher low. So that would still be considered an uptrend. Hopefully that makes sense for you there. So now let's go to the 1 hour time frame chart, right? And in order to find our zones or our areas for potential entries, right, we want to go down to the line chart. And we want to look for the most recent peaks in this case, right? Because we are in an uptrend, right? We identified that on the 4 hour time frame chart. We want to find the most recent peaks to where the price is currently at, right? So let's grab our rectangle again, and we can see in this case, this is a peak right here, right? But the price is trading below this peak. So we wouldn't be looking at this one because price is already traded through and is trading below that peak. All right, so in this case, this one back here, this would be an area that we can look to get potential buys off of because, right, we created this peak and then the market was trading below, right? We rejected off of it. We resisted. This was a resistance now, traded lower. And then instead of resisting here again, we actually broke through and now it acted as a support right here, right? Acted as a support. We made a new higher high, came back down, and now it's actually supporting off of that again. So we're going to look to see if we can get some kind of reaction back in the zone to get potential buys higher. right? And then from there, where is the next most recent peaks, right? We can see right here. We're going to go back a little bit further just so you guys can see this a little bit more clearly as well, right? Is right here in this area, we can see that the market made a high point here and then resisted off of that area for quite some time, right? We have a few different touches in the zone. We played below. We resisted off of it one more time, played lower. Now it came above this high. And now we're supporting off of that area, broke below again, resisted, and then broke above. So this would be our next zone, right? The next area that we're going to be looking for the market to act as a support. So now we're going to go off of the line chart and go back to the candlestick chart. And then we're going to see which candle are we going to use, right? In this case, I would like to use, I'll mark this out with an arrow again, this candle right here. And then if we go over here, we're going to use this candle right here, right? The zones are not too big. Let's make this one lower. And also for marking out your zones, you want to use not from wick to wick for that specific candle, right? But you can see I marked it out from the bottom of the body of that candle to the top of that body from that candle, right? We're not looking for the wick to wick. We're looking just for the body of that candle. And then from there, the last step that we want to do is grab our price label, put one here, and put one here, right? In this case, we are going to use 22.75. That's a quarter level. And then in this case, we are going to use 23,000 even, right? That's our price labels right there for that zone that we're going to be looking at. All right, does that make sense, guys? Drop a 3 in the chat if that makes sense. Hopefully you guys are following along. 3s, I see the 3s, awesome. Right, so now that we have those two areas that we're going to look for potential reactions out of, right? You can see that the NAS actually already bounced off of that area and gave us some kind of reaction, right? We're actually going to talk about that next week, but we're going to drop lower time frame again, right? This isn't something that, we're not using indicators and, different tools to help us to see, if the market's retraced or not. We're not going to use fibs, anything like that. We're just looking at the raw chart, right? Doing top-down analysis from the daily time frame down to the 1 hour time frame, right? Identifying, are we in an uptrend? Are we going to be looking for buys, or are we going to be looking for sells because we're in a downtrend? Right. And another thing to note too is, let's say we're down on like a 5-minute time frame chart, right? We can see that the market's doing quite a lot of stuff here, but we are way too zoomed in, right? The reason why we start our top-down analysis from the daily time frame chart is so that we can see overall what has that currency been doing, right? What is the bigger overall picture that the market is giving us, and then we work our way down, right? For somebody new into trading, especially when I first got started in trading, it was something that I always tried to find the perfect zone or entry or the trade to take on the small time frames, and that's something that really, didn't help me go far in trading, because I was always so zoomed in on what's happening now, right? What's the 5-minute time frame chart doing? Where can I find an entry on here? Right? You want to start big and then zoom in and go smaller, right? Daily time frame, we found our daily zone. 4-hour time frame, we found our higher highs and higher lows, lower lows, right? We can see that the market's in an uptrend. And then now on the hour time frame, we can see that we found our zones that we're going to be trading out of, right? So let's take a look at one more. What was said in here? GBP, JPY. Let's go. So we're going to take this from the 1 hour chart and go to the daily chart. And from here, we can see that we have our daily high right here and our daily low we can actually use right here, right? I wouldn't go this right here just because that's not a low necessarily, right? It's just the market just made like a pit stop kind of there, right? We just traded lower for a little bit until trading higher. So this is our daily low right here. So we have that identified. We'll go down to the 4 hour chart. And now looking at this data, which way or which trend is this market moving in? Right? We can see we have lots of different highs and lows, but which way do you guys think that this market is moving in before we mark it up? I see downtrend. Does anybody think it's in an uptrend? Downtrend. Everybody's saying downtrend. All right, so this is on the 4 hour time frame chart, and we are in fact in a downtrend on this chart, right? So let's mark this up here. We have a lower low that was just created, right? Coming from right here, which would be our lower high, because this high is lower than this previous high, right? Right here, we actually have a higher low. And in this case, we have another higher high. Right, so the 3 most recent, if you need to do a few more, maybe 4 or 5, that's fine too. Right, just make sure that you can see and identify which way this market is moving, right? And you can see as well from here, we're just going to mark this out so you guys can see this as well. The market was actually consolidating in this area, right? From these highs here, we never broke above those highs. We kind of just played in this area, right? Until we finally broke below all of this area, right? So this break of structure here, we're looking for those recent lows. It got swept through. We created a lower low. Now we're in a downtrend. We're going to be looking for sells. All right, so let's get rid of that there. Drop down to the 1 hour time frame. And then what do we talk about for sells, right? For buys, we're looking for the most recent peaks closest to price action. And for sells, we're looking for the most recent valleys, right? So let's take this back again off of a candlestick chart, go to a line chart. And what we're going to do is we're going to look for the peaks, or not the peaks, the valleys, sorry. In this case, we can see right in here, we have these valleys being created, right? So I would look for somewhere in this area. And then our other most recent area for valleys, right, is this area right here. You see that? If we zoom in a little bit more, we have a valley being created here. The market supporting off of that area, broke below. Now it acted as a resistance until it broke above again Here we created another valley, right? Let me just circle these for you guys so you can see. So here we have a valley created. Here we have a valley created. And then all the way in through here, we actually resisted off of there, right? Played lower. We broke above this area right here and then created a valley, right? So now that we have those two areas, let me just get rid of all these. We're going to look for, back on the candlestick chart, two candles in these zones that we have that are going to be our entry areas, right? Most recent to price. And again, I'm going to draw these out with an arrow. In this case, we're going to be using this candle right here. If the market is in a downtrend, if you're looking for sells, you want to look for bearish candles to mark out your zones. And in a bullish environment, if the market's in an uptrend, we're going to be looking for the bullish candles on the peaks, right? And in here, we're actually going to use this candle right here. And then make this a little bit smaller, like so, right? From body to body, same thing here, body to body. Those are our two zones. So now the last step, right? We're going to look for a price label, put that right there, and then put it right here. And then what do we say? We want to use the quarter level theory. And then in here, we can actually do 198.75. And then for this one, we're going to use 199.25 is going to be our zones, right? So those are our two zones that we're going to be looking off of, right? So you always want to make sure you're looking for three specific things, right? Are we in an uptrend? Are we in a downtrend? What is the most recent peak or valley, right? If we're in an uptrend, we're looking for peaks for the market to react out of. If we're in a downtrend, we're going to be looking for the valleys for the market to react out of. And then from there, right, which candle are we going to use, right? And sometimes you're not going to be able to see it right away, right, where those peaks and valleys are, right? Sometimes it might be a little bit confusing. So that's why we actually use the line chart to take away all of the wicks and different things like that, right? Take away all the different candles. And now you can clearly see, right, all of the different peaks and valleys where the market has created, right? So every time the market creates a high point, right, whether that's here or here or here or even here, those are considered peaks, right? And if the market makes lows, right, like here, 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 those are considered valleys, right? And if the market, in this case, we do have this valley right here that's closest to price, but the price is already trading in that area. So you want to look for the one above, right? Which is this one. You want to have multiple times where the market reacted out of that zone to give you a better support or resistance area, to give you a better zone for the market to continue to react out of your zone, right? But with that being said, guys, that's what I wanted to cover with you guys today, right? Next week, we're actually going to be covering how to figure out when the market is reacting out of our zone, right? How to actually take the trade in our zone, right? What it means for the market to react out of those zones. Right now, we understand from top-down analysis, right? We understand how to find our daily levels, our daily highs and lows, right? We drop down from the daily time frame to the 4-hour chart to figure out, are we in an uptrend or a downtrend with the three most recent highs and lows, right? And then going down to the 1 hour time frame to actually find the zones that we're going to be looking for a reaction out of. Right. Hopefully you guys enjoyed. Hopefully you guys learned something today. Go into the family chat on Telegram and drop your biggest takeaways. Right. And I will see you guys all next week to find and see the reactions out of our zones. And hopefully, maybe we'll even find a few setups that we're going to look for together on stream. And I hope you guys all have a good rest of your Tuesday. We'll see you guys all next week. Peace.